Welcome to the Simply Financial podcast. I'm your host, Christopher Calandra. This is episode number 12 of season 4. I wanted to talk today about marginal tax rates and the progressive tax system that the U.S. imposes today. So a progressive tax is a tax that imposes a lower tax rate on low-income earners compared to those with higher income, making it based on the taxpayer's ability to pay. At least that's the theory. That means it takes a larger percentage from high-income earners than it does for low-income individuals. So that makes sense, but it's a little more complicated than that. The reason why I'm recording this episode today, by the way, is recently I had a far-ranging discussion/debate with a very good friend of mine who's incredibly intelligent and well-read. In the course of the discussion, it came to my attention, though, that he struggled appreciating how the progressive tax system works and the marginal tax rate. So that's what I wanted to talk about today. Marginal tax rates explained. Determining your tax bracket is not as simple as just adding up your total income and then checking a tax table. It's more complicated than that. Taxpayers need to calculate their taxable income, which can also be referred to as their adjusted gross income. Also, it goes by AGI, adjusted gross income abbreviation. And once you have your AGI, then you adjust your income for any deductions, adjustments, and exemptions that people are allowed to take to come up with your final taxable amount. So deductions, you often hear that term thrown around. You could itemize your deductions, meaning you list item by item, line by line, deductions you have. Although today, 80 to 90% of American tax filers take what's called a standard deduction. So you take your total income and then back out your deductions, and that gives you your taxable income, or AGI, or adjusted gross income. They all mean the same thing. Once you determine your final taxable income amount, it's critical, and this is where my friend and I were speaking and shared with him some things that had eluded him. Not that he's a dummy, because he's certainly not. He's smarter than I am. But this is what he wasn't appreciating. It's critical to know that not all of your income was taxed at the same rate. So if, for example, you are married, filing jointly, your first $19,400 of earnings, or taxable income, I should say, your taxable income is taxed at 10%. Now, let's say the married filing jointly couple makes $119,400. That means that the first $19,400 is taxed at 10%. And then $1 over that $19,400 is taxed at a higher rate. Today, that higher rate is 12%. So it's what's called a graduated rate. You graduate from 10% to 12% once you go $1 over $19,400 if you're married filing jointly. And so if the married filing jointly couple earns in taxable income $119,400, they are going to graduate from the 10% rate, in which the first $19,400 is taxed at 10%. Then they'll have a bunch of money taxed at 12% on their way up to the marginal tax bracket of 22%. The marginal tax bracket means that it's the last dollar earned. What rate is that taxed at? So in our example, it should be most likely the 22% tax rate. That means the last dollar earned is taxed at 22% in my example, and that's the marginal tax bracket. What trips a lot of people up is they think that if they're in the 22% marginal tax bracket, that means that all of their income was taxed at the 22%, that all of their taxable income or their adjusted gross income is taxed at 22%. And that's not correct because of the graduated rates. By the nature of having a progressive tax system, everyone will have some money taxed at 10%. And if they have enough income, they'll go to 12, 22% onward up the graduated tax rate system. So that is marginal tax rates explained. This, by the way, was covered in Elliott Wealth Management Services' first quarter 2020 tax report. If you're our client or on our mailing list, you would have received this report already. We got rave reviews about it. If you're not getting our mailings, you probably should go to www.elliottwealth.com and please sign up for the mailing list. And while you're at it, sign up for a complimentary consultation where we can discuss how we help our clients win with money and increase their financial IQ. Additionally, I always ask to have you subscribe to this podcast. If you haven't already, that would be terrific. If you haven't done it, please do. I will be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.